In 2026, the global economy is in the middle of a massive tug-of-war. You've got these two incredibly powerful yet totally contradictory forces pulling everything in opposite directions. On one side, you have this huge political upheaval. And on the other, you have these powerful economic trends that just don't seem to make sense together. So today, we're going to dig into the institutional research to figure out what is going on. And nothing, I mean nothing, captures the global anxiety better than this number right here. In January 2026, the price of gold didn't just inch up, it completely smashed past $5,000 an ounce, hitting an all-time high. Now, this isn't just a few investors hedging their bets. No, this is a massive, frantic flight to safety. And the real question is why? What are they all running from? Well, Ian Bremmer from Eurasia Group puts it about as bluntly as you can. He says the core problem, the main tension of our time, is this giant clash between political revolution, happening right in the United States, and these powerful, conflicting economic forces. This isn't just business as usual, folks. This is a fundamental rewiring of the entire global order. So let's start right there with that first major force, America's political revolution. Because this isn't just about what's happening inside the US. It's a radical shift in how America deals with the rest of the world. And you can believe the effects are already rippling out everywhere. And at the absolute center of this change is something analysts have started calling the Donroe Doctrine. You can think of it as a much more aggressive, assertive foreign policy. We're talking about actions like the apprehension of Venezuela's president, all aimed at establishing absolute, unquestioned American dominance in its own hemisphere. And make no mistake, this doctrine is being put into practice right now. This isn't just talk. You can see it in action. We're seeing territorial ambitions pop up again, the weaponization of trade deals like the USMCA to strong-arm neighbors like Mexico and Canada, and huge checks being written to support friendly regimes. The point is, each of these is a tool being used to reshape alliances and cement that dominance across the Americas. All right, so let's switch gears to the economy, because while all this political change is happening, an equally dramatic story of winners and losers is unfolding in the global markets. It's a story of extreme polarization. Now, if you just glance at the surface, you might think global growth looks okay. But peel back just one layer and you see this giant divergence. The US economy is projected to grow at a pretty solid 2.4%. Meanwhile, Europe is struggling to even hit 1.3%. This isn't some balanced global recovery. It's a two-speed world, and the gap is getting wider. And then you have the third major player in all this, China. Now, China is dealing with a massive crisis at home, a deep deflationary spiral thanks to its property market completely imploding. And its strategy for fixing its own problem is basically to make it everyone else's problem. This number right here is just staggering. Over a quarter, 1 in 4 of all publicly listed companies in China are now unprofitable. This is the highest level of corporate distress they've seen in 25 years. It's a direct result of demand collapsing at home, leaving them with this massive industrial overcapacity. So what do? They trigger what everyone is now calling China Shock 2.0. To survive, these zombie firms, companies that are basically unprofitable but are being kept alive by government money, are just flooding the global market with cheap, subsidized high-tech goods. They're just trying to dump all their extra stuff. And this strategy of exporting their deflation, it's putting unbelievable pressure on manufacturers all over the world. Okay, now picture this. All of this deep economic divergence is happening against a backdrop of incredibly tense geopolitics. And that combination, economic friction and political friction, is creating huge supply shocks and sending investors running for cover. And let's be clear, this is not some theoretical risk. This is happening. We've seen real-world impacts, like an attack that literally wiped out 17% of Qatar's LNG capacity overnight. These conflicts are directly disrupting critical supply chains for everything from energy to basic goods, and that just pours fuel on the fire of market volatility. And the market's response to all this? It's a roar. Just look at these numbers. In the face of all this uncertainty, major banks are forecasting gold prices to climb to levels that, honestly, would have sounded absolutely insane just a few years ago. You've got Wells Fargo looking at over $6,000 an ounce, Deutsche Bank right behind them. This is a massive consensus. So what's lighting the fire under gold? Well, it's pretty much a perfect storm. It starts with huge, growing concerns over America's debt, which actually triggered a sell America panic that hammered the dollar. So what do central banks do?
They start buying gold like crazy to get away from the US dollar. You add on top of that the widespread expectation that the Fed is going to have to cut rates, and boom, you have powerful, sustained demand for the ultimate safe haven asset.
So, let's get to the big question. In this deeply contradictory world, this mix of political chaos, economic divergence, and a mad dash for safety, where on earth can an investor actually find growth? Believe it or not, the commercial real estate market is the perfect example of the entire global economy right now. It's a perfect microcosm. Because inside this one sector, you can find both extreme, crushing stress and one of the biggest growth stories of our time, sitting right next to each other. So on one hand, you have intense distress. I'm talking about a loan maturity mountain of over $1.7 trillion in commercial mortgages coming due in the US alone. Trying to refinance that much debt in a world of higher interest rates, well, it's creating an absolute crisis for property owners. But, and this is a huge but, on the other hand, the AI revolution is fueling an unprecedented, historic boom in one very specific niche of real estate: data centers. The demand is so incredibly strong that industry leaders are calling it the big story. It's a key megatrend that you simply cannot ignore. And that really brings us to the most important takeaway, which comes from the folks at PwC. They say the best bet for navigating 2026 isn't about picking a single market or a single asset class. The real key is to identify these resilient megatrends, things like technology and demographic shifts, that can thrive no matter what chaos is happening around them. In a world of contradictions, the winning strategy seems to be combining rock-solid safety with very specific, highly targeted growth opportunities.